I turned a small profit on this trade into a $20,000 mistake. This was a swing trade alert that we had in the Market Master group that ran well over 100% in the span of just a couple of months. Unfortunately, I made the very common rookie mistake of selling way too soon. This is the same mistake that most new traders make on every single one of their trades, but luckily there is a simple fix that we can do that will allow us to capture almost this entire move. So stay tuned, I'm going to share that with you in this video. So in order to understand this tip that I'm going to give you in this video, it's important to understand where I went wrong with this trade. So I'm going to break down my entry, my exit, and what I should have done differently in order to capture almost this entire move that followed the entry alert. So this swing trade was alerted to our team of traders on April 23rd of this year, 2026. That is the day that we have highlighted here. We can see that it pulled back a little bit from that entry price and started to curl up, had a gap up, and then trended higher and higher and higher over the next few months. And very quickly, to give you a little bit of insight into the Market Master group here, this is the actual alert that was posted to our team of traders. And this was setting up for its first pullback after breaking out of its multi-month range over the past week. Fundamentals also look strong here with great EPS growth, 51.31% insider ownership, and increasing institutional ownership. I'm liking this for a swing trade targeting the $100 area initially. Ideal entry, in my opinion, would be closer to the 10 and 20-day exponential moving averages, currently in the $75 to $77 range. I have some price alerts set and will be ready to start scaling in near those prices. And we can see from that swing trade alert over the next few days, it trended lower perfectly down into those moving averages, curled off of them, and then started to pick up on its run. Now, I started to buy into this right as it was curling up off of those moving averages, right in that $80 range. And we can see that over the next few days, this actually started to pick up a little bit of momentum here, spiked back up into these previous highs. I locked in some profits here back into these past highs. And the reason for that is because I knew that we had earnings coming up in the next few days, and I didn't want to be holding a full-size position through the earnings report. So in my opinion, there's really nothing wrong with doing that, locking in some profits. But where I went wrong with this trade was the fact that this had a strong bullish reaction to that earnings report. It gapped up, it was able to consolidate and hold onto those gains really well, turned those moving averages back into support once they caught up. And this is where I was selling out of my entire position. This is where I exited out of the rest of my shares, rather than realizing that this was just a bullish signal and this was a good setup for the next move up. So instead of holding on to this and capturing this entire move that followed, I saw this quick gap up and I decided to sell out of my entire position. And I was able to lock in a $3,000 about profit on this trade, but given the current prices, I had 200 shares from about $80 per share. The current price is sitting at about $177. So I would be up about $97 per share at the current price. In other words, I would be sitting on a profit of about $19,400. And up at these highs, this would have been well over a $20,000 profit. So that's exactly where the method of scale and trail is going to come into play. And this is a method that we talk about in detail in the Swing Trade Bootcamp. So if you're looking to learn more about this and learn more about managing your swing trade positions, make sure to join us using that link down below in the description. But the idea of scaling and trailing is we're going to be scaling out slowly of our positions. In other words, selling a portion of our position at a time rather than the full thing all at once. So for example, if we were to buy this stock as it's maybe starting to break out a bit of its range, over the next couple of weeks it has a nice spike up. Instead of selling our entire position and locking in all of our profits at once and completely getting out of the trade, we would sell maybe 25%, 50% of our position, whatever it may be. It's going to be a little bit dependent on the individual setup and the individual stock. But that gives us the freedom then to hold those remaining shares to try to capture a larger portion of the move. And the benefit to this is that it's going to reduce the trade's risk, it's going to secure partial profits into strength, and it's going to make it a lot easier to hold through the stock's volatility to be able to catch a larger portion of the move with those remaining shares. So that is the scale aspect of the scale and trail. The trail comes into play after you start to sell and lock in some profits. In other words, after you start to scale out of part of your position, you would then look to trail your risk level for the trade up to the nearest low. So for example, when you're entering this trade, your initial risk level might be underneath these previous lows. However, once you lock in some profits on this trade, you want to further reduce your risk and prevent this from turning against you and falling back down to your initial risk level. So you would actually move up your risk level then to the nearest low, which is going to allow you to hold through a stock's normal volatility and only get stopped out of those remaining shares once the trend actually starts to reverse back into a downtrend. So in the case of SEZL, we can see from this initial entry that we had here, really there's no point in time where this starts to break down out of this uptrend until maybe around here in the middle of July, when this starts to form a little bit of resistance around this 180 area, 185, and it actually starts to break down a bit underneath these moving averages, starts to form a little bit of a lower low here. Somewhere in this range is where this would really start to be, potentially flipping from an uptrend into a downtrend. But prior to this, there really would be no reason to sell out of your entire position. So with the scale and trail method, you would maybe be locking in some profits into this gap up, maybe into this big extension away from the moving averages here. But ultimately, you would be holding on to at least a portion of your position until it does start to flip out of that uptrend and starts to break back down underneath previous lows or underneath moving average support. And by doing that, you would be able to capture pretty much this entire move, maybe selling up in the 160s, the 170s, allowing you to capture pretty much the entire move. Whereas for me personally, since I kind of fumbled this trade, I was selling the last of my shares in the low 100s down here after we had this gap up. And you can see pretty much the same thing happen over and over when you're looking at leading stocks. When they're in a strong trend or they're breaking out above past highs, they tend to respect their moving averages as support. We can see the same thing here with MU. It starts to break out here, picks up momentum, turns the 10 and the 20-day EMAs here into support. And you really would want to be trying to capture the bulk of this move if possible. And if you just pay attention to how the stock is reacting to past lows and to these moving average levels, that's going to allow you to be a little bit more patient and to be able to capture a larger portion of this trend, really only selling out of it once it starts to break back down under the moving averages, because that is where this might start to actually flip from an uptrend into a downtrend. So anyway, learn from my mistakes, because it is important to be able to capture as much of the move as possible when we're swing trading. We have to make sure those winning trades outweigh the losing trades, and the scale and trail method is a great way to do that. I hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And if you want to learn more about how to manage your position in a swing trade, you'll also learn our 3 swing trading strategies step by step, and you'll get access to all of our swing trade alerts in real time. That can all be found at Master the Market. There's going to be a link down below in the description for you to learn more and to get signed up. Thanks again for watching. I hope you enjoyed, and good luck with your trading.